Why do they call a HECM a reverse mortgage? Is it the opposite of a forward mortgage? Well, it kind of is. But here's why they use that term. Let's say that you had a HECM mortgage, which remember stands for Home Equity Conversion Mortgage, and it's the government's acronym for its reverse mortgage program. So here's how it would go in reverse. Let's say that you had a mortgage of $100,000 and you switched it to a HECM, and you chose not to make any payments at all, which you're allowed to do. Well, let's say the interest rate were 3 or 4%. 3%, if you make no payments, then at the end of the year, your balance will have gone from $100,000 up to $103,000, right? The 3% interest would get added on to the balance on your loan, but you wouldn't have to make any payment all year. That's what they mean when they say the mortgage goes in reverse, right? Because you didn't make any payment, the interest is added to the balance of the loan, and so the balance is going up, right? Now, you don't have to do it that way. Let's say that you had that HECM mortgage of $100,000, and you chose to make a payment every year of, let's say, $3,000. Well, then at the end of the year, your balance will still be $100,000 because you will have made an interest-only payment. It won't reduce the principal that you owe, but it won't go up either. And that's what I call a HECM in neutral, right? Interest only. You just pay the interest and you leave the balance alone, right? The other way that you can use a HECM is just like a forward mortgage. You could make a payment every month that is interest and principal, and just like a traditional mortgage that you probably have now or used to have, the balance would go down over time. It would work exactly like a traditional forward mortgage. So it's not like that if you switch your mortgage over to a HECM, as soon as you get in the HECM, it just starts going backwards. It just backs up. It just goes beep, beep, reverse, reverse. That's not it at all. You decide whether you want that mortgage to go in reverse, whether you want it to go forward, or whether you want to leave it in neutral and just pay the interest. The important thing about the HECM as we get older is it's simply safer than a traditional mortgage. A traditional mortgage, you have to make that payment every month on a certain day, no matter what. And if you don't make the payment, you're going to get a phone call and a letter, and eventually, if you don't make the payment, you can lose the house. But with a HECM, that's not the case. You can decide if you have a HECM mortgage, whether you want to make a payment that month or skip it, we'll make it next month. And no one calls and no one cares because you're allowed to do that with a HECM mortgage. It's simply safer because as we get older, we don't know what's going to happen tomorrow. And if things, aren't ideal, the HECM gives us the peace of mind of knowing we don't have to worry about it. We can start making payments again in 6 months if we want to take 6 months off. Take a whole year off. Maybe something happens, God forbid, and you need some extra help around the house. Don't make the payment for a couple months. Use that money to bring in the extra help. There's no limit to what you can do with a HECM. So think about it. It makes a lot of sense. It's a lot safer. And it's not a reverse mortgage unless you make it one by not making a payment. You start making the payments again, and now it's going forward. All right, I hope that helps. And if you have more questions, click on one and I'll answer it for you.